Unlock wealth. Discover Robert Kiyosaki's path to prosperity through strategic investment in undervalued assets. In these uncertain times, economic experts have been sharing strategies to navigate the challenges we face. Today, we'll delve into a prediction made by the renowned author Robert Kiyosaki, who accurately foresaw the Lehman Brothers collapse in 2008. His insights suggest that now is the time to consider investing in assets that may weather economic storms and potentially make you rich. Welcome to this video, where we'll explore Robert Kiyosaki's perspectives on the current state of the economy and his recommendations for safeguarding your financial future, recognizing the current economic situation. As the world grapples with economic uncertainty, it's important to consider the insights of experts like Robert Kiyosaki. Kiyosaki has a track record of accurate predictions, including the fall of Lehman Brothers. His latest warnings indicate a global downturn characterized by collapsing real estate, layoffs, and inflation. He asserts that we may be heading into a crisis worse than the global depression. Despite the grim outlook, Kiyosaki's perspective is uniquely optimistic. Kiyosaki's unconventional outlook. Robert Kiyosaki's perspective on the current economic landscape is nothing short of unconventional. While he acknowledges the severity of the challenges we face, he also offers a unique lens through which to view them. His outlook is characterized by a blend of stark realism and resolute optimism, a combination that might strike some as surprising. Amidst the grim predictions and worrisome indicators, Kiyosaki spots opportunities for smart investors to thrive. He reminds us that even in times of crisis, there are pockets of potential waiting to be tapped. Kiyosaki's candidness, coupled with his unfiltered expressions, might be jarring to some, yet his core message is crystal clear. There's a way to navigate through the storm and come out on the other side. By adhering to his advice and considering investments in assets such as gold, silver, and Bitcoin, individuals can position themselves to not only endure economic turbulence, but potentially capitalize on it. Personal stories from past recessions. To truly grasp the impact of economic downturns, we turn to the poignant narratives of individuals like Christine, whose personal experience during a previous recession provides a haunting reminder of the challenges families can face. In her recollections, we witness the stark reality of families grappling with unemployment, financial instability, and the emotional toll of failing to provide for their loved ones. Christine's story serves as a testament to the societal upheaval that accompanies economic crises, highlighting the profound effect on both individuals and communities. Through her eyes, we see how economic turmoil can transform familiar neighborhoods into silent streets, devoid of the vitality of children at play. It's a sobering illustration of the fact that a recession isn't just a numerical decline, it's a collective struggle that resonates across households. By sharing stories like Christine's, Kiyosaki underscores the urgency of preparing for economic uncertainties and the imperative to learn from history. These personal stories serve as a call to action, a call to equip ourselves with the knowledge and strategies needed to weather the storm and emerge stronger on the other side. Distrust in government and financial institutions. Kiyosaki's skepticism toward government and traditional financial institutions is rooted in a broader narrative of disappointment and unmet promises. He calls attention to instances where citizens, including veterans and the middle class, have been left grappling with financial struggles and homelessness despite government assurances. This disillusionment fuels his conviction that individuals must assume responsibility for their financial destinies. Kiyosaki's stance is reinforced by personal experiences where he witnessed firsthand how government policies could fail families in dire times. This catalyzed his determination to break free from the cycle of dependence and advocate for self-sufficiency. His criticism isn't confined to a single nation. Rather, it's a critique of a system that, in his view, often prioritizes political agendas over citizen welfare. Kiyosaki's message resonates with those who seek greater control over their financial security and look to steer clear of a system that he believes is flawed. His message resonates with those who seek to take charge of their financial futures, steering clear of a system that he believes to be inherently flawed and unreliable. Investing in tangible assets. Kiyosaki's investment philosophy emphasizes the wisdom of seeking refuge in tangible assets, even amidst the tumultuous fluctuations of the financial landscape. He identifies three key assets: gold, silver, and Bitcoin, as potent vehicles for safeguarding one's financial well-being. With a history steeped in intrinsic value, gold and silver have long been considered stores of wealth, weathering economic storms and maintaining their allure. Bitcoin, a modern addition to this list, embodies the concept of the people's money, offering a decentralized digital alternative to traditional currency. Kiyosaki's advocacy for these assets is rooted in his belief that they possess the resilience to endure even the harshest economic conditions. By investing in these tangible forms of wealth, individuals can potentially mitigate risks associated with currency devaluation, inflation, and market volatility. Kiyosaki's message underscores the importance of diversifying one's portfolio beyond conventional investment avenues. As he contends, the embrace of tangible assets not only reflects a strategic approach to wealth preservation, but also an acknowledgement of the intrinsic value that these assets bring to the table: the devaluation of currency. Kiyosaki's insightful critique extends to the conventional notion of currency and its vulnerability to the erosive effects of inflation. He directs our attention to a fundamental truth: that the value of money diminishes gradually over time, driven by the relentless force of inflation. This erosion weakens the purchasing power of currency, making it a progressively less dependable vehicle for preserving wealth. In response, Kiyosaki advocates a strategic shift towards what he terms real money, assets such as gold, silver, and Bitcoin. His resolute belief in these tangible resources stems from their historical resilience and enduring worth. By redirecting investments into these assets, Kiyosaki argues that individuals can insulate themselves from the corrosive impact of inflation and capitalize on the potential for sustained wealth accumulation. In a world where traditional currency's value is consistently undermined, Kiyosaki's proposition encourages us to consider alternatives that promise greater stability, enabling us to navigate the challenging financial terrain with confidence. Predictions for the future. Looking ahead, Kiyosaki's predictions offer a glimpse into potential scenarios that could reshape our financial landscape. He envisions a future where gold and silver prices surge, propelled by shifting government policies and market dynamics. He encourages investors to remain vigilant about changes in interest rates and global economic trends. Kiyosaki's insights suggest that those who heed his advice and invest in assets like gold, silver, and Bitcoin may find themselves better positioned to weather the storm. His foresight emphasizes the importance of adaptability and a forward-thinking approach to financial planning. As economic uncertainties persist, being attuned to these potential shifts can empower individuals to make informed decisions that protect their wealth and pave the way for a more secure financial future. Robert Kiyosaki's perspective on the current economic landscape is one of cautious optimism. While acknowledging the challenges we face, he highlights the potential for investors to navigate these difficulties and even come out ahead. By considering his recommendations to invest in gold, silver, and Bitcoin, individuals can take proactive steps to secure their financial futures. If you found this video informative, then don't forget to like and subscribe to Know Money for more amazing content.